Welcome everybody. Now in this video I am going to show you one of the best ways, the best kept secret of how to identify or find stocks which are undervalued. Now what do we mean by undervalued? What I actually mean by undervalued, if the stock is being sold live on the stock exchange, whether it's in the US or in the UK, it's being sold below the market value of the company. Now the market value, I'm going to show you how to work out the market value. I'm going to walk you through an example of a stock that I've traded historically, and I'm going to show you live what how you can benefit from buying a stock, why you should buy a stock which is undervalued. Right now, this isn't an easy quick fix or a get rich scheme. I'm going to tell you right now, it's going to take a lot of effort, and it's going to take a lot of grit and some homework that you need to do to ensure that you have done your research properly before you go into a stock. But when I do show you what a stock, an example of a stock that you can apply this methodology to, you'll see for yourself the value in learning this process, and you will become a successful trader, whether you're trading US stock exchange stocks, or UK stocks, or anywhere around the world, whether they're penny stocks or whether they are actual FTSE or Fortune 500 or S&P stocks that you can go ahead and apply this to. It's about development. It's about learning new stuff, new ways of approaching your trading journey. So without further ado, let's get on with it. Now, one of the first thing is making sure that you know or are well versed and have some sort of experience of where to get information from. And when you have that information, being able to go ahead and understand what exactly you're looking for when you interpret that information. Right, so one of the best things that you can do is learn basic level of accounts. Learn how to work and navigate through a balance sheet and work and navigate through a profit and loss account. One of the basic things that you need to do, you have to invest in your time in learning how to do that. And once you have a good understanding about that, I'll have a tutorial later on about how to navigate through a balance sheet and how to navigate through a profit and loss account. But for this video, we're looking at very high level, and I mean high level interpretation of certain line items on a balance sheet and a P&L, and being able to understand what to look for when to value a stock, or potentially a stock which is below market value. Right, so here we go. First and foremost, I'm using an example which is going to be based in the UK. Furthermore, it's going to be an example of a penny stock, not a listed company. So in this example, we're going to be looking at a stock which is listed on the AIM market, not the FTSE 100 or FTSE 250 or 350 in the UK. The same principles that you're going to learn here can be applied to Fortune 500 company, SP 500, and or OTC stocks, right? Penny stocks. Okay, there's a different interpretation of what a penny stock means in the UK, and there's a different interpretation of what a penny stock means in the US. But the fundamentals of what I'm going to teach you today is going to be exactly the same. So first and foremost, understand some good sites that you possibly can get information from. One of the best sites that I use to get my information, which is issued to the market through the official means, is this Vox Market, which is a free website. You can log in, you can register, it's all free. There are some paid options, but I'm not interested in them at the moment, so let's just go straight into it. Now, one of the most important things, so it's voxmarkets.co.uk, right? And there are alternatives for the US, but I'll do a separate video of where you can find information both for the UK and the US market. But for this example, I'm going to use Vox Markets and what information and where to find the information. Now, first and foremost, what we need to do is understand which ticker or which stock that we are going to look at. Now, for this example, I'm using Eve Sleep, which is a sleep wellness stock in the UK. It's on the AIM market. It's a penny stock, and you'll see example why I'm using a penny stock, because that's pretty much where you can make the quickest money in the shortest period of time. But it's not day trading, so don't get confused. Day trading is, you come in a stock probably within the start of the day, and you're out of the stock at the end of the day. This is not that. This is going to be a bit over a long term, but I'm going to show you why it's important, and having some patience is very, very good for you. So today as it currently stands. So let's draw this out. The stock is trading at 0.5, so 0.95. So the stock is trading at 0.95. It's already gone up by 5%. Ignore that for now. That's, we're not interested in the movement in the day. What we're interested in is what is the stock being sold at right now, live, as we currently speak, as I do this tutorial. Okay, so it's 0.5. Now in this information, if you look at it, what do I need? Which is the key area of information that I need to understand and focus on? And that's all in this little box here for now. Step one. Here's the market cap, right? This is what currently the market is valuing the company at, and the market is valuing the company at 2.61 million pounds. So 2.16 million pounds. That's what its market is being valued at the moment. Now, how do you get to that figure? So 2.16. So the first thing that you need to learn is you need to verify this figure. This figure you need to verify independently. To do your research, do not rely on information that is out there. You need to make sure you know how to calculate that. How do you calculate that figure? Well, what you do, you take this amount here, the number of shares in issue, right? The number of shares in issue, times it by this figure here, the value of the stock as it currently stands. So if you do and get a live quote, you'll see that you can buy this stock today at 0.95. So this times this should equal this, right? This times this should equal this, right? So the number of shares in issues times the value of the stock at any given time. So we're talking about today, and today is the 24th. Sorry, no, it's not. It's the 18th. God, I'm losing it. So today is the 18th of July, and the value of the company today is 2.61 million pounds. We're going to show you that. Let's work it out together so we are all on the same page, and I'm not just making this up, right? So what did I say? Roughly 2.4, so 274 million. That's 274 million. Times that by 0.00. Remember, it's below a penny. It's a penny stock. 95, and it works out to 2.6 million, which is, you know, there's some rounding issues here, so there's 100,000 here, so roughly it's around about 2.61 million pounds. So that you get comfort over that, that's correct. Now you also need to make sure that you know that this number is correct as well, and there's various places where you can find the information, but for generally for these purposes, I'm going to go with this. I'm happy with that because I know it's roughly right. I know this is correct because I've done it historically. So for this example, fine, I'm happy. So first and foremost, I've verified what the live quote is. I've verified what the market cap is. I've verified what the shares in issues are. I'm comfortable what the market cap is at the moment, or the market cap, or what the market is actually currently valuing it. Now, why is that important? Remember, 2.61 million pound is the value that the market is valuing this company at. But why does that matter? Well, if you go into news on this particular website, it'll be different for different stocks, and whether they're in the US or in the UK. But for this example, let's scroll down. You gotta read all these RNS. These RNS announcements are official announcements by the company through the London Stock Exchange, and they are fed into the public domain. Each one of these are going to mean something different. That's not the purpose of this example. We're going to scroll straight past this and making sure we're looking for the latest and greatest update from the company, the financial position of the company. There's a lot of stuff that we need to digest. Just quick example, if you see a chart like this and you're saying, okay, if you look at a year and you see the all-time high for this company is roughly 3.5, 3.6 for argument's sakes, and now the company is at 0.95 as we see here today. That doesn't mean that this company is worthwhile buying. That does not mean that this company is undervalued. Okay, a lot of people make that mistakes, but that's not the case. Why? Because between here and between here, the company could have sold a lot of stuff. They could have been in trouble. There could have been a litigation that could have come, and that's why the price has gone down. Right? The market doesn't really make a lot of mistakes. That's not to say they don't always get it right, but the market generally is telling you something, and something somewhere is priced in. Right? So from here to here, something's happened, hence why the share's gone down. But that does not mean that here it was overpriced or here it's underpriced. We have to have a better detailed deep dive into what's happened to understand the movement from here, okay? But do not look at charts at a high level and say or assume that that's correct just because it was 3.6 here. It will get back to that. Something could have happened, right? There could have been a dilution, there could have been a sell-off of an asset, there could have been dividends paid, so the cash has gone down and it's been redistributed to shareholder. There's a loads of reasons why it could have gone down, but do not take it on face value, okay? So learn that from this session. If you take anything else away, at least that's an important point. But we are going to see how to value this company and get some detail behind it. Now, if you look through a lot, there's a lot of forms. There are people buying into a share or selling the share, and that's what a lot of these forms actually mean. Typically it's TR1 in the UK, but there's also forms like institutional investors disclosing their positions. But it is very important, like they've got an open offer disclosure here, so that's a future event, and that's very, very important, and I'll tell you why that's very, very important. But this is a future event. I can't see a latest and greatest update, a position of the finances of the company anywhere here. But if you scroll down, you'll have all their official announcements by the company in this section, in this RNS section under the EVE ticker for in Vox Market. So let's scroll down. Where are we going to see? So I know that there was an update. So there's a final update. So this is the update 3 months after year end typically. So this is the final results which have been audited by an auditors within the UK. If the company is trading above £6 million, so they'll need to be audited against by an external third party. And if you look at this, I can't see any other annual report and financial statement, notice of annual general meeting. That will come up later, but I can't see any other position, latest and greatest positions, formal sale process. This could be a trading update here. Let's try this trading update, see if there's got any details behind it. Strategic financial takeover, dispensation, trading update. If there's a trading update, there's a key item that I'm looking for. This is just a general update on how well they're doing. They can be exposed to weakness and decline confidence. Both the wider landscape of these headwinds are slowing ease progress towards strategic financial goals. First 5 months of trading is expected cost of living crisis continue to. The board is not expected to meet the previous revenue. Oh, this is interesting. So the board is not expected to meet its previous revenue expectation in the current year. And if you look through the previous guidance, they were going to become net even. So that means the cost versus the profits are going to be net off to zero. So they made some good thinking, but this is a key note to take away. Stuff that you need to look for, but they don't give you what the financial position is. Right, okay, fine. But that's a good update. Good to note that always, but it doesn't give you, for the purposes of this tutorial, it doesn't give you what we're looking for. We're doing a very high level overview, not necessarily specific to EVE future stance, but it was just to how to identify how a stock is undervalued and how I've managed to profit. So now we've got where was it, final results. That's the latest and greatest update that I can see, where we can get the financial position. So this here is what you need to look at. Now, like I said, it's usually 31st of December if they're going to give in March, because they disclose accounts usually 3 months after the date the accounts have been closed. So as I was saying, 31st of December 2021, perfect. This box here now is going to be very, very important, right? This box here is going to, let's see if you can undo that. This box here is going to be very, very important. Now the reason why it's going to be very, very important, look at this now. So the company as it currently stands is valued at 2.6 million GBP, so that's British pounds, but this group revenue was 26 million. That's a huge difference, a disconnect between where it is. But that's not the figure that we are interested in. So let's just be clear, that's not the figure. It looks very, very impressive. What, it's almost 8 times, no, almost 13 times where the market value is, but the gross profit is 14.7. You need to understand what makes these figures. So the group revenue is the revenue that they take in, the turnover. The gross profit is the turnover less the cost of sales, and that will usually give you this figure. and then you have the gross margin with 55, which is a fantastic margin. But ignore this, ignore that. So these two figures are very important. This is very, very important, but not for the purposes of this high level overview. Again, high level overview. Underlining EBIT loss is very, very important. So that tells you that a year on year they're making a loss of 3 million. So even though they've got a very impressive revenue figure and a gross profit, they've got a wonderful, absolutely amazing gross profit margin. Typically for a company to be successful is 30%. 30%. Remember that 55% is exceptional, exceptional. So, you know, everyday kind of business, if I was to see that, you know, I'll be jumping for joy and saying what an amazing company, and typically would be, but there's underlying issues. However, if you look at the EBIT loss, so the earning before income tax, dividends and amortization, it's 3 million. So they are loss making company. The statement that they made, this should have been in 2022, should have been reduced to zero. So that means that they're not making profit and they're not making a loss, which is still a very, very good position to be in if you were to kind of make sure that this company was doing really well. But what we're really interested in this scenario for this purposes is this figure here. This figure with the net cash position. Now, why is this figure so important, right? The reason why this is so important is at the moment the company is valued at 2.6 million, but its cash position is 4.5. Its cash position is 4.5. Now, what do we need to do to get comfort over that? Now, what we need to do is look at their burn rate. Last year, the cash position. So burn rate means the amount of cash that they get through year on year. In 2019, if you look at this one, in 2000, I haven't got a pen, so I'm using my mouse to do this, and I'm positioned a bit awkward, so hence why it's not being that clear. If you look at this position, they had £8 million in cash, but then next year they had 8.4, so they generated cash by 0.4, which is amazing, right? Even though they were EBIT loss, they generated cash, which is absolutely amazing. And then going forward from 2020 onwards, they reduced their cash position by roughly 3.9 million. Roughly 3.9 million. So I'm going to clear this because it's getting a bit messy. Roughly 3.5 million. Just sorry, 3.9 million. But for the sake of this tutorial, let's just say their burn rate. Yeah, their burn rate is around about £2 million. The burn rate is around about, sorry, the burn rate is about £4 million. I'm getting too excited. The burn rate is about £4 million year on year, right? Just, we want to be prudent. We want to take the worst case scenario and apply that. We don't want to take the best case scenario because we're going to expose ourselves to risk. We're taking the worst case scenario. Now, I know for a fact, because I've made money on this business, on this company a few times over now, I know for a fact that they don't have a lot of debt. So when you look at the balance sheet and you look at their debt position is next to nothing, and therefore their balance sheet is very strong. So they'll have a strong assets, they'll have less debt, so therefore their net position would be in a positive, not a negative. So that's why this figure for here is very, very important to understand. So now, given that this update was on the 31st of December and today is July, so we can assume that if the same rate of burn was to apply, they would have roughly got through £2 million worth of cash, right? £2 million worth of cash. Now, so if you take £2 million worth of cash away for a burn rate, roughly, that would leave them roughly £2.5 million in cash. Now that's assuming that they have no debt. That's assuming that they have no debt. And if the company was to stop trading today, if you were to buy at 0.95, which is the rate that you can buy on the open market right now, then you will have broken even if the company goes bust. There's no debt, and they imagine they don't sell any of the assets, you will get distributed £2.5 million worth of cash, right? So important, so important. As it currently stands today, this company is being marketed on the open market at its cash value. Cash value, right? That's unbelievably important for an investor. Cash value. Cash is king. If you're going to find a company and it's valued at cash, you should be looking very, very, very closely at that business, ensuring that all other information stacks up. And net cash, their net cash position, look at this balance, was 4.5 million at the end of the year. Cash value is what it's currently at now. So we know that they're not going to break even. We know that they're going to be losing some of that money. If and depending on what the strategy is, subsequently they can potentially lose a bit more money. But I would envisage, and this is always looking at the business and looking how well they manage, etc. But I envisage that this business is subsequently going to be reducing some of their outlays to ensure that the cash reservation is going to be high. So this is just highlights from what the position was on 31st of December, but we are very interested in here. Now, why are we very interested in this figure here? If we take all that into account, we know the cash burn is here. If I can pull out the balance sheet, let's quickly see if I can pull out the balance sheet. There should be a breakdown of the balance sheet, or you can just go on Eve Sleep. Let's go on Eve, if I can find Eve Sleep investor relations. So let's go into investor relations, because that's one of the quickest way to find their balance sheet amount or accounts, and just to prove out that they got a good balance sheet. Ignore that. Where's any notifications, reports and presentations? I didn't want to go into this, but I'm just going to trading update, trading interim results 2021, that's September. So we want the latest and greatest trading update. The trading update one annual report will give you the information. And what we want to do is very, very quickly look at the balance sheet. Just very, very quickly look at debt. Oh god, it's taking a bit of time. There's a lot of stuff happening. I'm recording, and obviously it's going to draw down on my power. So scroll down to the balance sheet. I'm looking at figures. I'm not interested in the rest of the jargon. You have to do this on your own for the purpose of this presentation. I'm doing this quickly. So here's the consolidated financial position. So remember, take out intangibles. You really want to be looking at property, plant and equipment. That's going to be very, very important. And you want to look at liabilities. So the net position, net assets is 3.9 million. Lease liability, trade and other payables, 2.8 million. So if you look at their cash position or the current assets, it's 7 million. Their trade payables provisions is roughly around about 4 million. So that still leaves about 3 million pound. So in essence, if this company was to go bust in its current position, it's going to be valued at 7. So total assets, or so I want to strip out intangibles. I don't like to have intangibles. I want tangible items as opposed to intangibles, because intangibles, you can't really sell them on, or they're not valued. But for argument's sake, I would say on a prudent approach, I would take 7 million versus 4 million, which leaving me roughly about 3 million pound. The company today is valued at roughly 2.5 million, with a cash position of that 3 million. The cash position on its own is going to be roughly around about 2.5 million pounds. So that I just want to give you a very, very quick overlay on looking at liabilities, ensuring the current assets and the liabilities all stack up, so it's a positive delta, not a negative. And then going back, okay, we know it's roughly around about 3 million is where I would value this company if it was to go bust today, completely bust, stop trading. What would be the value of the company? 3 million. Why is it important? Come back to here. This is another, so this one you can use for US and UK stocks, but if you go on investing.com, it'll give you and highlight charts, and you can set these charts up as ever, whatever indicator you want, but it will highlight charts for you. There's a paid option and there's a free option. The free option for me as an investor works really well. As a day trader, it does not work well because you want live data. But ignoring all that, for the sake of this, presentation, let's look at why that 3 million figure, have that 2.5 million pound cash in your head and have that 3 million pound figure in your head. Why is it important? Because now if you apply the same principles here, you watch the company go down. Now look at this. So this is where it gets really interesting. At its lowest points, you could have bought at 0.6 on the open market. You could have bought this stock with nothing's changed on roughly on the 29th of June 2022. You could have bought this stock at roughly 0.6. Worst case scenario 0.65. Let's take worst case scenario. At its best option you could have bought it was 274 million times 0.00. Remember, it's below a penny, so 64, and the company would have been valued at 1.7. The upside is almost 100% to where you've calculated, not anyone else, you've calculated what the market value of that company is. You've calculated it. If the company went bust and stopped trading absolutely today, its cash position would have been around about 2.5 million on, 2.5 million on the 29th of June 2022. It's below cash. Remember, even if you take its debt and you look at all its assets, it's below cash. Its cash position would have been sufficient enough for you, if the company went bust, to have reduced risk. Now what really happened, and this is why it's so important, because somewhere along the line people will get frustrated and they'll start hovering around. You can even get it at 7.4, which would value around about 1.8, 1.85. But lo and behold, what does the market do? It corrects itself. Look at that. If you bought here, even if you bought here, right, which valued the company around about £2 million, you still would have made roughly 70%, 60-70% in a space of 13 days, right? This is July, this is June, this is July. The market, and you would have ample opportunity to trade that. Ample opportunity here, because this is what's regarded as being below cash. Here, here, and then bang. And this has happened so many times. I made so much money off this one company that it put me in a fantastic financial position. If I go back, I think we'll go back in weeks. Just want to capture the period because it was below this. It's done this before. Just because it's done it before doesn't mean it will always happen this way. But I know for a fact, because I did this a few years back. It did exactly the same thing. As happening right now. It did exactly the same thing here. If you want to go and check the RNS, you've got the Vox Market app, you got the Vox Market facility available. You know the website. You can independently check what I'm saying here right now. A lot of people will make a lot of claims, but they will not be able to justify their positions. If you look at here, because I bought it at 0.72 back around about 2020, perfect, absolutely spot on. If you look at this date here at 70 pence, and it went all the way there, it was below cash. Do the exact same, backtest this. I want you to go ahead and backtest this. You will see with your own eyes that at this date the company was below value, below cash. It was below cash. It was screaming. It was in a better position here than it is today. I want to make that very clear. It was in a better position here. If you look at it, it's roughly around about April 2020. So no, sorry, March 2020. Funny enough, about the same period of time where we are today, but it was in a better cash position here than it is today. I want to be very, very clear. It was such an easy and obvious buy that I was screaming at every single person that I said it to made money on this. There was no one that lost money. It just takes patience. It's not a day trade. It takes patience before the market realizes, and bang, it gets hit right here, 7 pence. It was so obvious. It was ridiculous. You can make 400 to 500%. I made around about 400-500%. I think I sold out about here, and it went on further. But I'm not saying that I caught the top. I'm not saying that I did actually catch the bottom. But I'm not saying that you'll always catch the bottom. But if you start piling in it, it's not about catching the bottom, it's about you understanding what's happening and coming in and then buying it. The exact same thing that happened before is happening right now. The company is looking to sell. They will not sell a company below cash. They will not sell a company below cash. I want to repeat this one more time. They will not sell a company below cash. Their debt is minimal. Their assets are not overpriced. Their assets are greater than their debt. The cash position is very strong. The balance sheet is very strong. They're loss making, absolutely. The longer the sale goes on, the weaker the position. But for if there's a competitor that wants to buy it, look at this. You could have bought it right here around about 0.6, 0.4, and you would have made that money. You would have de-risked and left a free float to take advantage. Where do I see being valued at potentially? And this is not a advice, but what I would want to see this is probably around about two or three pence. 2 or 3 pence is where I want to see this being sold at minimum. Even today, there's such a great opportunity. Upside's great, downside's minimal. Right, remember that even if you buy today, it's valued at 2.5 million. You have to make yourself comfortable, strip away the cash over the next 6 months. That's not to say they'll have to do an update soon. They'll do an update in September. I would wait till September to have an update. Remember, maybe just hold a position. If it goes anywhere here, you know what, I would be going in, just buying it, building a position up for the update, make a decision when they have an update, understand where the liabilities are, understand where the cash position is, what the cash burn is. If they've reduced their cash burn, which I suspect they would have, if they reduced their cash burn, or if they're generating some revenue, absolutely brilliant. The upside is greater than the downside. This is the most important thing. Now, what you learn there, you could apply to any business out there. In the US, there are so many opportunities that are below cash. To name a few, I think Wish is below cash, but Wish is is going through a churn at the moment, and he needs to get his house in order. So Wish is below cash. In the US, let me just quickly pull out my stocks that I've got, so I can give you a better insight into what I'm holding, which I think are below cash potentially. There's so many opportunities out there right now in a bear market, but it takes patience. Car lots is another one. Right now, I believe it's at below cash, but it's not being managed very well. It's a very big risk. What else is there? I think those are the two that I'll probably say for the US. For the UK, there's so many more opportunities in the UK at the moment, but it takes time. You have to do your homework. You have to make sure that you know what you're looking at, understand the balance sheet, understand what liabilities mean, and understand what the market cap is. I hope this was a good example. I think it will change your life if you learn and back test what I've just told you today. Learn this, back test it, use the example that I've given you, walk it through as I have done, step by step, and then once you get comfortable, apply the same methodology for argument's sake, apply the same methodology to Wish. It's a good example because I know it's below cash, or is trading roughly below cash. Car lots is another example, but car lots is not managed very well, so I'm not asking anyone to necessarily kind of take a deep dive, but look and see if you apply it to your current position, apply it to your current stocks. Where are you with your current stocks today? I hope that's helped. This is MJS and Youngs. Thank you very much. Make sure you like and subscribe. It really helps me out. And this is the best kept secret. I will give you so much insight on how to do tutorials regarding navigating through your balance sheets, navigating through your profit loss accounts, what to look at, and generally life as a trader and as a finance professional.